Hey, what's going on, guys? Welcome back to Way Up Trading. Today we're going to be going over in detail on AMC stock. Going to take a look at this thing up and down throughout the charts based on a couple of things that we're seeing going forward. Want to make sure this thing is as clear as you could possibly get it, because I do believe we're at a spot where things can get really interesting on this particular name. So take a look here. We're going to go over the charts, do a couple of different things to kind of pinpoint where things could potentially go over the next couple of days. And we'll do all that and more right after this.
Did you hear that?
Well, I watch the stock market channel all the time.
All right, here we're going to pull up the chart here once again for AMC. Going to take a look at a couple different things that are happening here from the longer term. You guys hopefully have caught that longer video that goes over everything as far as where I believe the chart is heading over the next little bit after the higher lows have received on the higher time frame chart, where things could potentially go over the long term. But for today, we're going to just mostly speak about what I expect over the next couple of weeks going into the end of the year, and where it looks like we're heading based upon a potential breakout that can take us into some higher numbers from where we are now. I'm expecting somewhere in the range of roughly about a 70 to 100% move from where we are at current levels as we speak. So here's what it looks like so far as we've been watching this macro descending broadening wedge, which we've been watching ever since for quite some time now. Obviously, this yellow line is one we've been getting halted every single time we've approached it. So right now we're in a situation where we're making our way. If we continue to hold these higher lows, which looks really good so far, we'll probably make our way towards that line very soon in the future. We do have a macro trajectory that still seems to be heading up towards somewhere in the summertime. If it happens sooner, that's awesome, fantastic. Somewhere in the summertime for a higher break outside of this line if things continue along in this path, if we don't get a crazy candle to the upside. A lot of it has to do, in my opinion, with some things that are going on with GME, also with the company as well. Hopefully things start to turn around from here and happens much sooner. So we're ready to go, but gonna use what's in front of us for the time being. But ultimately, this is the longer term trajectory, getting us back into the higher numbers to potentially get us back inside the playing field, at least $11, somewhere back in that range, which would at least give us an opportunity to break it early if the breakout that we're seeing here starts to work out in our favor. Ultimately, that would hopefully get us out into the higher numbers, back into the 30s, 80s possibly as a top side, and then potentially going a little bit higher back to potential all-time highs within a couple of years or so. All right, months to years. Just want to set expectations. Rather be pleasantly surprised than be painfully let down. All right, so we remove the playing field. Again, we know that descending broadening wedge. You're going to go into the more near term, which are what we're really focusing on at this particular point in time, going into the next couple of weeks, leading into the end of the month and probably into the new year, is this particular section right here. This is from the Judge Zern breakdown, and from the all-time lows that we're dealing with at the current moment. Pretty much watching from the Judge Zern breakdown, which was the 100% move that we got since after hours, kind of riding in this thing down from where things started to take shape in the post market the following couple of days after the run up, bringing us pretty much to present day. So as we see, we have a little bit of support that was built off of the drop downwards before heading to the upside, which formed a little bit of a spring down here, down in the $2 range, a couple times right before the GME squeeze and AMC squeeze that pulled everything up back into that $11, $13 range, and then pretty much bringing us to a sideways trading period for several months now. We're forming a little bit of a similar situation here on a larger time frame. I just want to make sure we point out a couple things while we go on, but one thing I do want to make clear is this guy right here. It's a little bit of an ugly double bottom right in this range prior to the move up. Just pay attention to that, and you got this push up. All right, great move. Fantastic move. We all remember that. Played out really nicely. So I just want to make a point of that. Now I want you to also take in consideration this particular area. Again, the downtrend from Judge Zern. This is the 23-hour chart, which includes the after hours move. This went roughly to about 13.25 before coming back down. And you can take a look here. You can see that from a larger perspective, from roughly about the $6 range, we have a similar setup happening in a much bigger way. All right, just notice this little area, about $6 and change. All right, from this little bump downwards, you have a V and a rounding with a couple different touch points that coincide with the uptrend that we have here from the roughly about the $3.50 range. And we've been basically making higher lows till we now are about to approach a breakout in a little bit if we can hold certain levels. We'll go over to certain levels that we need to be concerned with in a little bit. All right, clearly you can see we have a little bit of a supply and demand range. This has been roughly between the $5 and $6 range. Obviously, it's been serving as supply, very high supply up here, and brought it back down, obviously, to hold us down within this range. And a lot of buyers obviously been stepping in from the $2 range all the way up towards about the $4.18 range, which is a very significant location that we mentioned in the past that would serve as areas for things to start to turn around. And then from there, it has been stepping up to now $4.26, being that area where things actually are holding up pretty strong. So $4.26 has been a major location. A couple of folks have been playing some of the plays we put out there on Twitter based on that $4.26 range, which some people made some decent money on the plays that we took a little while ago. So hopefully that was you, but we're going to take a look at that, how things play into where we are currently. Now, if you've been following along, you've probably been watching this thing pretty clearly. You see how sellers have really tried to hold this thing down and fake things out within this range. Very important to pay attention to. We mentioned a little while ago that there was a blue uptrend line. This is from the all-time lows. That looks like it had broken down a few different times, and we're now, based on the close that we had this past Friday, we've actually now been able to re-enter it, and now we're back inside based on the closing price on Friday at $4.55. So it's, again, just above this blue line. You can see we have been able to just about enter back into it, and things look pretty good on this front. Now, a couple of people have been probably watching this downtrend here, this little bit of a wedge that's been built, resistance, bringing this thing back down towards the supply zone and towards the demand zone, and now bouncing off this top trend line, this red line here, which has been pretty significant. But again, we're still being faked out by higher resistances, and it's eventually hoping to break out of this area to start to get the moved up that we all want to see back up towards at least hopefully double digits in this case. But to start off, we have again a couple different fake out patterns that have been playing out in this range, and let's go over those real quick. Again, here it is once again, your bit of an Adam and Eve pattern that's starting to show up with multiple touch points, playing that downtrend from the Judson line, and from here looking to potentially cross to the upside and break out to try to retest that supply zone one more time at some point. The good old 527 line. This has been a major resistance. If you guys remember that, how many times we bumped into this thing within this range here, it's incredible. That's going to be another situation where we will bump into it again, where it will meet a certain location of issues to get past. But we have a major breakout on our hands. That's potential to move this thing up. So we're going to pay attention to those lines as we get closer. But for now, it looks good overall until we actually get there. So moving in a little closer here. This was the Adam and Eve, or the Eve and Adam version of the pattern that we played the other day. Threw this one out on X a little while back. Now this is between the demand zone, the supply, and the demand zone that we've talked about, trying to break that line. This is the downtrend from the Judson line, the major one that we're talking about since the Judson news. This line here. All right, we tried to break this out. I did put a post up on X here for calls at the time, roughly about 430 up to about 490, 491. We did not get it. We did not break out of this downtrend, which sent us back in. The pattern was there. Everything looked like it was ready to go. However, seller stepped in, dumped this thing right back down in order to try this one more time. So we're back in the spot here where this is, again, created a higher low off this green line here. Created a higher low off 426, which again is that major location that we need to hold. And now we're going to give this one more shot. So I do expect going into the next couple of days, another push down, not a major one, but I'm looking for some certain areas to hold before potentially moving out. And we'll go into other portions of why I think those support areas will hold. But for now, I'm expecting one more push down because this was sort of faked out in after hours. All right, it came up, after hours hit, you dropped down slightly. 455, 450 was the major area to hold above. And we are holding above it, which is fantastic. What I want to see is continuation. And there are a lot of signals that are showing that this thing will continue to move up based on where it is, volume-wise, and so on. So we'll go into those in the next little bit. So then also want to make a note in this situation. So in this situation as well, in that Adam and Eve we just talked about a little while ago, or even Adam pattern, this guy here, we also were trying to break a descending broadening wedge, right? This set up here. So within that Adam and Eve pattern, within this Adam and Eve pattern, we're also trying to break this downtrend, a descending broadening wedge from here, right? Also trying to get this to break out, which we are still in line to try to do here, right? Very important. This descending broadening wedges generally will have a nice break to the upside with targets that generally would be within this range, somewhere in that $5 range. And again, multiple patterns are showing up on this thing at this resistance line or at this uptrend line that's been established ever since the all-time lows. So then I want to point that out. In this blue uptrend line, again, this blue line shows up from the all-time lows, and that's what we're trying to make sure we maintain. So buyers are stepping in to defend this thing from breaking that uptrend in order to drop this, to keep it from dropping back in the lower numbers somewhere in the 3s or even 1s if that line would actually fail. So it's very important that we hold this line and hold this uptrend that's established from the all-time lows. And so far, so good. I mean, things are looking really good as far as the chart's concerned. We have GME, which is obviously a bullish setup here for us. It's actually pulling things up and outside of this and back into the uptrend, which we're looking really good so far on getting above. So ultimately, I mean, it's so far so good. But we're gonna go more granular, make sure we got everything clear, so everyone knows what to do. Hopefully, can set themselves up the right way based on some of the stuff that we say. But again, nothing I say is financial advice. You do what you do. However, just want to point out what looks pretty serious right now in terms of opportunity on the stock. All right, now in the nearer term, again, we're going to pay attention to this larger Adam and Eve pattern we talked about a minute ago. This V, this U, inside the supply and demand zone where we currently are now, breaking back above the uptrend from the all-time lows, and now trying to make our ascent to break the Judd Zern downtrend line finally. Well, the more recent Judd Zern downtrend line here, where we are currently roughly about 460 and change. Now this is the pattern we're looking at currently, another fake out pattern to try to make this move happen, where we start to move back up towards that supply zone and hopefully break out of the downtrends. There'd be no more downtrends left at this point if we can actually get it to happen. All right, this is basically, we're down to the wire, pretty much the final days at this particular point from this entire setup as far as the macro distribution looks like. All right, we basically go into the advancement stage or moving toward the upside and continue the upside movements going forward, all right, over the next year or so. But so far, I just want to pay attention to this. But right now, this is the particular pattern we're dealing with. Just pay attention to these blue lines. All right, blue uptrend here. This is going to be an ascending broadening wedge, which technically usually winds up being a breakdown after it hits a certain point, which is kind of what we saw a little while back. We didn't get the move all the way up. We did get that 487 move. We got rejected, brought back down. Typically, you'll get a breakdown on this type of pattern where things move to the downside. Let me move this over for a second. But you get a breakdown when you don't touch that top trend line. This guy here, you don't touch it. You typically will come back down, get a partial decline, and then you break down out of this thing, which will take you lower. However, we did not get a situation like that, simply based upon the idea that we did bounce off of 426. So I mean, we're right down to like the wire. All right, so far it looks good, and I'll explain why I think this still has a high potential to continue to move up in the next portion of the video here. But this so far has the look that it needs to have in order to start to move up. And again, but this would be the version of the ascending broadening wedge I'd be looking for us to start to actually play. We'd have to move up, play into the upside, start breaking a couple major resistances, and then start to break up towards that upside, probably trying to go and attack 527 again before hopefully breaking that with this confirmed downtrend break here, and then run up towards the higher numbers, which I still have a target in this situation about $8.98. Speed, time frame might be something that we got to pay attention to of how long this will take. I know a lot of people have that question, how long it will potentially take to get up there. But give yourself time. If you're trying to play contracts, give yourself time for those things to develop. Don't try to do weeklies or anything like that, because there are a lot of things in the interim you got to be concerned with to protect yourself from any types of loss. All right, so do pay attention to that very clearly. But for right now, this is the pattern, the ascending broadening wedge, which will hopefully break us out of this downtrend from Judd Zern, get us up to at least 5 and change area, break a few creek lines, and so on and so forth, which are all pretty much bundled in this particular area. We'll look at that in a second here, but that's what we're dealing with at this particular stage of the chart. So in terms of time, what you're pretty much doing is looking for confluences in any areas that actually show the ending of a trend. In this case, we have what just took place on Friday the 25th, which brought us up in this range to try to break to the upside. From here, I'm looking for a time frame. This is, again, very important time frames. Notice again the rounding that's happening on this larger Adam and Eve pattern. This is the rounding section. On the Eve section, you get multiple touches of this yellow line, slightly moving higher, lines up and coincides with a potential move on December 4th, which is a couple of weeks from now. All right, this is actually going to wind up being where you have the uptrend, the downtrend from Judge Zern. All right, and you also have the uptrend that's happening with this rounding Eve portion of the Adam and Eve pattern. That lines up with just about very close. This is going to be just about where the GME earnings takes place on December 4th. Very important. Obviously, we know GME is in a very, very bullish situation. So we're going to watch out for that. It's going to have an effect on AMC. If you haven't paid attention to that and see how they move together, you're missing out on a lot of opportunities based on that. All right, so just pay attention to that. That's something we need to be concerned with as things go forward. So GME's earnings is on December 4th, so do keep that in mind. All right, time frame wise, outside of that, we'd be looking for a potential move. Let's go to the 23 hours, make sure that it's clean. Another potential move would potentially take place somewhere about December 9th, which is just after that, which ends the downtrend on Zerd. If we don't break out of it prior to that, that would end that. Again, also always got to think about downside in case it does occur. Things do change, but again, I'm looking more so at this being bullish toward the upside than anything else. If that happens, again, this is going to be the area we will be looking at roughly about December 9th. And then if it goes even longer than that, we're talking about potentially going into January 2025, or potentially somewhere in the end of December 20th, Friday, December 20th, for this thing to actually get all the way upwards, curl up, meet the alternate after hours move to the Judge Zern move. This is the red line here, and then start to make its way from there. So roughly anywhere between this range, this next couple of weeks obviously is going to be major. I'm looking for, again, that first couple of days into December, probably the second week of December at very, very least, before we start to make the move to the upside, in my opinion, based upon this entire chart setup. All right, so here are your major resistances that you're going to have going into the next couple of days. Again, I'm just going to leave these here for reference points as far as the dates and the ends that I actually can see here. Again, keep in mind that we have that rounding pattern that's happening on the Adam and Eve pattern, which is that rounding setup. Again, stepping things up to the upside as price moves upwards, higher and higher lows, trying to break this downtrend to get us up towards those higher numbers. But you're paying attention to this red downtrend line here from Judge Zern, and then again this uptrend and rounding setup here that we have on the Eve portion of the pattern, as well as the underside support or uptrend that's happening here. All right, and your major resistances are going to be a couple different areas. So I'm going to remove these just again for visual reasons. And here are going to be your major resistance here based on a 23-hour chart that includes the after hours moves. Major locations to break. All right, we're right now holding above 450, which is a major area to be above so far. I do expect a little bit of a pushback going in the next couple days, probably back towards roughly about the 448 range, or even the 449 range, to try to get a little bit more energy behind it in order to push us out of this downtrend over the next couple days. All right, the pressure has to come from somewhere, and in these cases it does need to drop down in order to get the liquidity as necessary to build enough strength to push outwards, or else it's going to sideways trade and wait till it kind of trickles out of it. You don't want that. You kind of want to push out that shows, hey, buyers are here, things are looking like it wants to step up. The good thing that I'm seeing here so far is the volume down here is actually stepping up to the upside as the price is rising. This is a great sign. All right, so we want this to continue. Watch for stepping up in volume above the average line as things move to the upside in order for us to get that. But it's in the short term, probably in the first couple of days of the week, I'm looking for a potential pushback down slightly below 450 to again gather enough strength to get ready for a move going into the short week, and then from there probably try to make the ascent by the end of the month. That would be ideal prior to GME earnings, or else it's probably going to wait till GME earnings. So again, watching for that particular pullback probably the first couple of days of the week, and then from there maybe sideways trade before getting a move upwards and out of here. However, the main locations you want to pay attention to, you write these down, check these out, mark these off on your charts. The main location, which is going to be the 4-hour creek jump, which is a very important cross to make. Need to get above that 465, 463 areas. There's going to be major resistance on the chart. This is the weekly 30 moving average, and then also the 4-hour creek line. If you can break above that 465 to 463 to 465 area, your next targets are going to be the upside locations here are going to be 487, which we did test back in this range here. We look for a higher high, again, breaking the downtrend on the daily, not including the after hours move, which is, again, this is going to be this thinner line that we do need to be concerned with because it was an area that was hit in after hours. So do pay attention to that. In this situation, we want to, again, try to get above the 6-hour creek, which is currently right now at roughly about 498. In my opinion, if you start to break above this area here, roughly about this 465, 470, again, you will start to see an increase in volume. Volume will start to increase, and you will start to try to push, again, to try to get towards that 491 target that we were not able to hit back here. I call for that target at 491. This green line, which I'm going to call a money line at this point. All right, and then from there, we're going to go ahead and break the 498 level. If we can break 498, the next 6-hour creek right now is sitting roughly at about 498 before potentially trying to regather that strength and then again trying to push up towards 527, that area, which is going to be a major one that I don't expect to break right away. We would probably take a little while, possibly push down for one more big retest and then start to make our way to the upside based off of that type of move. So again, we all know the 566 area is a debt to equity line. All right, I even have it marked over here that debt to equity is going to be a major spot. So they're going to try to do whatever they can to keep it from down there. All right, so whoever is trying to keep this thing down, sellers, whoever it is, I know some people don't like to hear the word they, but it is what we're dealing with. People on the short side trying to keep the stock down from making the move it needs to make, which in our case, we're looking for this thing to go up. So that debt to equity flips happened at 566. If we start breaking this downtrend and we can break these creek lines over the next little bit with a surge in volume, that's probably going to be the flip line, which turns everything around. All right, so again, it's something to watch. 527 we know, 566 comes up next, and then we have major resistances up here that will probably take a little bit more work. But with the increase in volume, hopefully with things continuing to move up on a daily, you have your next creeks at 566 and 665 and 668, and then we're talking potentially moving up to much higher numbers. My target on this thing is still right here, 898 would be my first major target if we can start to make the moves that we need to see, break these creeks, and then go. That'd be my first major target. Can it go higher? It can. We're gonna play it level by level, see what happens, and take it from there. But that's the first location I'd be looking for us to touch. If we can get this clean break out of this downtrend, break these levels, break the Judge Zern line, this one's gonna be tough. All right, 665, 668 is gonna be a tough one in my opinion. That's a couple different resistances, but if we can break that, no doubt in my mind, we'll see a little bit higher numbers. All right, we're gonna talk more about what else I see on this thing on the next portion in just a second. All right, so now we're back here. We're gonna take a look at the EMA and SMA analysis on the stock, get an idea of what it's looking like here for the next little bit. We probably also on Friday we had a nice close of day, which wound up being just above 455, which actually exact closing price 455, slightly above, just about above the 50 moving average on the weekly chart. This is a very significant location to be above. Great sign, good thing to see. We made it just by about 2 cents, where the 50 moving average is roughly at about 453. So we just made the cut. Not fully out of the waters yet, so I want to make sure this is very clear. We still got a little bit of work to do, because at the current moment on the daily, we are working right now to try to recover and turn things back around from the death cross that took place just a couple days ago. So I mean, it really took AMC down to the brink before trying to turn this thing back around. Death cross again is a 50 moving average, which this is the green line here. Just turned it on for a quick moment so we can identify it. This is the green line that's crossed, which is the 50 crossing below the 200 moving average on the daily time frame. All right, there's a little cross there in red, and it marks death cross right here. Trying to do some repairs to it, obviously, to turn this thing around. So far, it has the 10 moving average obviously pushed things up above the 200, and now you got this push back to the upside, which is great. Trying to reverse the damage that's been done from this death cross that took place, which dropped us to those lower numbers, but obviously it's rebounded us up out of that. So far so good. We're looking pretty decent as far as that's concerned, but it is going to take a little bit of time for it to play out. This is why I want to say more so toward the first or second week of December before probably turning around and possibly breaking out those lines we showed a little earlier in the video. Go back and take a look at those as well with those major resistance areas, which should line up all with the volume profile here on the VRVP of volume range, volume price. So it is a significant spot to be broken above here on AMC, right? You're above the weekly 50 moving average, which is nice to see. You haven't closed above that level in quite a while. The last time you actually closed above it, I'm going to turn off VRVP for a second here. Last time you actually closed above it, it's been a long time actually. We've had several rejections off in the weekly time frame. Actually lines up very well with the rejections off of the downtrend that you have ever since the all-time highs, that yellow downtrend that we played in the descending broadening wedge. Every time we touched that, we got halted, right? You can see how well it lines up with the halt lines. $34 run, the 8 squeeze, another squeeze at some other point that was probably halted. And you have this one here at Judge Zern, pushed back down. We are now slightly above it. Very good location to be in. Again, last time we actually had a nice decent close above it was back in January 2021. I mean, it's a great spot to be in. Again, still our work to do. We have a couple different things we have to be concerned with in this case. We have to, again, break those levels we talked about, roughly between the 465, 463, 465 area, which is the 30 moving average. I don't have it marked here. The 30 moving average on the weekly, that number comes out to be exactly 463. Once again, once you get a clean break above that, you might be most likely in position to again start breaking out 470-ish, 472, somewhere in that range. Once you start to break that 465, 463 location, you should start to get a nice influx in volume, and then we should most likely be on our way to break into those higher numbers. Now, I know a lot of people are hyper-focused on the moving averages, but you also have to take them in consideration with the exponential moving averages, EMAs, as well. And one thing I do want to make a point of in this particular spot is that we do have a particular momentum cross about to potentially take place. So we have not seen it in a little while. It is the 1348 on the daily time frame, which is going to be just in about a couple days if we can continue with the path that we're on so far. If we get that break on increasing volume, we have not seen that particular cross in a little while, right? We had that back in May. We've also had it back in a couple different locations on the daily time frame. Back during Judge Zern. So a few different locations back during Judge Zone. It was this cross here, and so on. Just a few different locations that were generally around the squeeze times, up into resistances where we're probably going to again go and hit. This would coincide with the targets that we talked about a little while ago. Here's your cross here back roughly about July 2022. This carried us up for a move back into that squeeze that we had prior to 8. And outside of that, the only other time you got that particular cross was back pre-January squeeze. So we're in this particular spot right now. So it's interesting to see it. It's looking like we may get a nice little move if we can continue and get that breakout that we're looking for based upon all the things we talked about a moment ago. That's what you would look for from that perspective. Your natural first target would generally be back toward the 200 EMA. All right, this is back here roughly about 675. Very, very straightforward. You need to get up at 675 if you get above here. You can see it was tested back before during that the run up in natural retest here. Again, at roughly about 675. If you can break that, you're moving up one more level, $11, and then the creek line's up here at $17. Doesn't have to play out exactly, but these are areas I'll be watching for potential to the upside in this situation. Now, each one of these areas is going to have major resistance. They're not going to just bust right through. You can get a move like that if the volume does follow through. It's not impossible for them to break through and start moving very quickly through those levels. However, they're going to give you significant resistance once you get to them. The 48 on the weekly is roughly around $7.97, so it's going to be just about an $8 target we mentioned. $8.98 is still my target specifically, but those are going to give you general resistance by the time you get there. So again, yes, we are looking at the moving averages, which is this blue one here, the 50 moving average we broke above. Still got some work to do to get to outside of the $5 range. 527 is going to be big, and then once you start to break those levels, we start talking about playing back up towards about $8, potentially higher to about $17-18 is a possibility. Not saying that we're going to head there right away, but again, look for this to be a gradual move up. Don't expect it to be a squeeze up to 1,000. Play it as if it's going to take another year. I can't suggest that enough. So just be careful with your positions going too short on time. However, for the moment, it does look like we have an opportunity to start to break back toward the upside to that $5 range, plus most likely to that $68.98 range if we can follow along with the way things are looking. All right, so now I've got the idea for what things are looking like on the chart. All right, now I do have to do this. All right, very important. Things look fantastic. We had a great close the other day. Things look good, but I do want to make sure that we are at least taking some things into consideration. Now, I have pulled up here. This is the general playing field that I have for the chart. If you guys watched that 45-minute long video on AMC, definitely go back and double check on that. But this gives you the idea what the playing field looks like on AMC's chart. Again, this is in log scale. This is the general area where things between the white areas and also the dotted line, but most of the trading has been taking place on AMC before on all its moves throughout the entire chart. All right, this area is the low. Obviously, this red side is going to be an overshot or supply zone. So basically look at it as a buy zone or demand zone, supply zone. And this is your general trading range. All right, so we want to take something in consideration. Now, just pay attention to these locations. Take a look at it. This is a real possibility. So again, I want to make sure that people are at least prepared in order for us. And we do have to discuss it. Again, be responsible, discuss these type of things when you see them. All right, so seeing something, saying something. All right. So as far as this is concerned, everything looks great. Things look like they want to push to the upside. Perfectly fine. But so far, we have to always have this. Remember, I have a target on this thing as roughly about $8.98. Real possibility to get back toward this $11. I notice again, $11 is that top side, bottom side of the playing field, and you have the $80 range as the top side of this playing field. Once you get into this range, things get really good, right? We start to move into those double digits. You get this acceleration start to happen. We start to be able to potentially break the downtrend, and we start to get ready to go. All right, that looks great. I would love that to happen. Now I'm gonna pull back up those EMAs we used a minute ago. All right, these are the EMAs. We talked about those briefly a moment ago. We went over them. We have a 13 and 48 cross roughly about to happen toward the 200, and all's right with the world. All right, now we're gonna move over into this range. Get a little closer on this thing. Just take a look when this happened last. All right, you have this move to touch the 200 back here, roughly about $13 at the time on a 23-hour chart. We have a similar move here. All right, we were rejected, brought back down. It's the same way we rejected, brought back down. Second move, outside of a very similar pattern. We talked about this high Adam and Eve situation right here. This V and this U. We had that back here as well. All right, here's the V, and there's the range. There's your V and your U. Now, on the second push, breaking out of this area, this box that I have drawn out. All right, be mindful of this. Notice this yellow line right over here. This is a 300 moving average. Pay attention to that one. I know it's not one that you clearly normally will hear about on most stocks. Not a lot of people talk about it, but it's one of the areas that I like to use in my strategy. So I want to point this out for you. There's a second touch. After breaking the 200, you go ahead and touch this one here. In this situation, if we were to go and copy something like this and we get a move up, we can touch the bottom side of this playing field. If we are rejected at $11, technically with double top here. So in the daily, it'll look like a double top, right? Double topping roughly at that yellow line. Very similar to what it did back here. Hit that $11 mark. If this fails and it does not fully break through, it's a possibility we can come all the way back down. All right, real possibility. So do prepare yourself in case of anything. We don't know what's going on with the things that are happening behind the scenes. There may be situations where you have things happening with the boogeyman, all that kind of stuff. We still want to have our head on the swivel just in case. But we do want to be mindful that this similar setup has happened in the past. So we need to use past situations in order to kind of see what could potentially happen in the future. For the time being, things look fantastic. We haven't crossed certain SMAs in a long time. But we, again, need to pay attention to all the things that are happening around us just to be on the safe side. All right. Now, in this case, again, you push through. It is a real possibility to get this move back down. Another double bottom, very similar. This would absolutely suck. But notice this push back down, a lower low, and then a squeeze. Very possible to right into this number here. All right, the 300 moving average, right, which is going to line up with $11. If this happens and we get rejected 11, not breaking the underside, which is again underneath this triple bottom, the previous all-time low, and we're rejected there, we could potentially come back down for one more final spring. All right, one more final spring that will send this thing to $80. That's how I see it. It's possible. I personally would like this thing to continue from where it is. It looks great to do so, but again, it's a real possibility to pay attention to what happened in this range, because at times history can rhyme. All right, so just want to make sure we set that expectation, at least can look at it from there. For the time being, so far though, let's put this away because it probably scares me and scares everybody too. So let's get that out of here. But for the time being, it looks good. Things look like it will continue to the upside. For the time being, we are still looking like we could potentially play this situation where we start to build and just gradually make our way to the upside, with this being the macro bottom and then continuing on. So let's take it for what it is. Watch the opportunities. Make sure you're protecting yourself accordingly. Hedge your positions. Be prepared for anything, because anything can generally happen, especially when it comes to AMC. All right, guys. All right, and for AMC, got this pulled up here. Now, these are going to be the oscillators that I'm using here in order to track AMC's movements while we make our way into the new week and a couple of weeks going forward. These are going to be the ones I'm paying closest attention to. You have your up, step, and volume, obviously, key indicator we always want to look at. Looking at a couple different order blocks, that's giving us more further indication of where the sellers are going to be stepping in to kind of keep this thing down. This is on the daily time frame. You can again see how clearly this lines up pretty well. Order blocks, blue represents your sellers, green represents your liquidity zone or areas where buyers are stepping in. Pretty much lining up very well with my EMA setup and as well as my SMA setup here, roughly around the creek line, which is the 4 hour. All right, 4 hour creek line lines up here, lines up identical with where the sellers have actually placed their orders, and buyers are sitting down here roughly between 443 and so on. So once this breaks up to the upside, you'll get this push. Again, I like the fact that volume is stepping up heading into GME earnings, and we had the end of the schematic that we mentioned a little earlier on as well, those downtrends for the particular break, and then we'll move up into the next levels here in just a little bit. We have the shaft trend cycle still showing that this upside continuation possibilities here, while we can ride up into the upside. Excellent look there. You also have the KDJ, which is flipped green for the first time in a little bit as of Friday, and now we're ready to push to the upside, being that momentum is now on our side here for the potential breakout that we are looking to see if we can clear those levels such as 463, 465, and so on. Get into that 470 range and start looking to break toward that 527 level one more time for a possible push through to start to move this damn thing. All right, we also have the money flow been stepping up nicely, obviously, along with our move up to the upside. Looks fantastic within this window. Again, GME earnings on December 4th. All lines up well. Momentum, as well as the TTM squeeze. It's flipped down for a little bit, but is now starting to make a step back upwards, as well as your momentum indicator saying that we have some momentum, bullish momentum, starting to step back into the stock. So things look great going forward. Pretty much, I want to see this thing move to the upside. I'm pretty sure all of you do. And we have good old GME on our side in order to pull this thing through, which should help out with the situation that we're going to see going in a little bit. So we'll go over that next. All right, now on a brighter note, we're going to take a look here at GME in regards to how this is going to attach to AMC and the movement I'm expecting going forward here. AMC, obviously, as you guys have probably already seen and noticed, GME has been pretty much leading the sector in the meme sector squeezes ever since the May move to the upside, and pretty much ever since this is all started, ever since January's move. All right, so you guys all know that, but basically right now it has been continuing. This is pretty clear. Taking a look here at May, obviously we got the push up on GME. AMC also followed. You can take a look here very clearly. Each spike has happened roughly about the same. The top side, the pink bar chart, is going to be the GME chart. The general candles are going to be your AMC chart, and for the most part, pretty much almost every single move GME makes, AMC is right there behind it. All right, it's just notice the bump outs and all. Now GME, as you guys know, I've pretty much been able to see that this is clearly the leader of the sector, and as it makes moves, which at this particular point in time, GME is looking phenomenal. Much higher price targets are on the realm. If you haven't took a look at my last video on regards to GME, where I believe it's going, we're looking probably somewhere in the $200, $200, $300 range in a very little bit of time. This is most likely going to move again several 100%, and AMC will follow behind it. Now, as long as things continue to move to the upside on GME, which is pretty much a shoo-in at this point, in my opinion, not financial advice, AMC will get a benefit out of it, and pretty much break, in my opinion, be able to break its locations and then start to move to the upside based on GME's movements, regardless of what anybody says at this point in terms of management or whatever have you. So it's always a possibility. We still again have to pay attention to opportunity possibilities for things to go the other way, because they are two separate companies. There are different things that can happen. But from a chart perspective and on a momentum perspective, in regards to what's happening with this sector, upside looks like the possibility with GME being a leader and the opportunities pushing up for GME, which in turns carry AMC. Again, earnings is coming up around the corner for GME on December 4th. I do expect continued upside and the idea for excitement to push along GME to the more higher numbers, probably hitting into the $30 plus range this coming week. In that situation, while AMC is looking bullish as well into this downtrend break we talked about, high possibility that going into earnings leading into the end of the month, we'll probably start seeing those numbers in the 6 to 7 range, potentially even $8 to $9 on AMC with a higher move on GME. So do keep your eyes open. Just want to make sure we point that out, because again, AMC is in position. GME looks ready to rip. I think there's a good opportunity to catch some upside and finally break this downtrend curse that we've been involved in with AMC for several years now. So do want to make sure we point that out. But everything other than that looks fantastic. Do keep your eyes on. It's going to keep basically going to be here every single day going over this chart, as you guys know, on the live streams, pretty much between 10:30ish, 11 a.m. to roughly about noon and a half, closer to 1, where we go over the different charts, different opportunities, different things that are happening with the stocks, our favorite ones, and some other plays that get thrown out there. To check us out to those live streams on the way up. Hit the like button, subscribe button if you like more videos like this. We'll go over it until we get to where we need to be, all right? Let me know if any questions in the comments, and we'll get back to you as soon as possible on those, all right? Take it easy for the rest of the afternoon, and we'll catch you next time. Peace.